So crude showing a little bit of resilience and some dip buyers in this market. Hello.
Yeah, no, it's interesting because we're right up against the three-time top at about $60 a barrel. So it's kind of interesting to see how it reacted here because we did get a nice build, at least that's what was reported yesterday, and market did sell off, came right back. And I think part of that is what we're seeing in the commodity complex as a whole. It is starting to show a little bit of life, especially relative to a lot of other indices. And they've been flat for the last 3 years. So again, one of the things that we're looking for is in order to get inflation higher, you're going to have to see commodity prices as a whole higher. And certainly the comments from the Fed today is, you know, hey, we're going to be on a long vacation. You kids be good and behave yourself while we're gone. And so I think that's kind of given a green light to risk-on investors in the marketplace.
Yeah, you know, when the draw came and the response was the build came and the response was so sharp, it seemed like we were maybe at a moment where you kind of have to question the steady trend higher for crude the last couple months. The fact that it didn't really precipitate further selling. I mean, I know we've kind of got a general type of, I don't know if it's risk on or what it is, because bonds and gold are so bid after the Fed, but I don't think that's got much to do with crude, does it?
No, it doesn't. But you know, again, it's in the broader context of the commodity complex as a whole. We're seeing it in the softs. You're seeing it in sugar. You're seeing it in coffee. You're seeing it in some of the meats. You're seeing it in a little bit of the grain market as well. So it's not so focused necessarily on one or two commodities. It's a little bit broader based. We'd like to see persistence if it's going to stick. And that's been a key question, and it's been a key issue for the last 3 or 4 years when you're talking about commodities.
Yeah. Paul, copper, I want to follow up with, I know you and I have discussed this. It's been a focus of our show here the last couple of weeks because it's even got more conviction than crude to the upside. At the rate copper's going, we're going to be back to year-to-date highs soon. I mean, you know, what's the follow-up here? Let's check in on this thing. What was the price you told us you were getting interested?
272.
Right.
We're a nickel or so above that. And that actually breaks down the downtrend line that goes back to early this year, or actually even last year. So, Ann has put in now essentially kind of a double bottom-ish. So we're getting a little bit more constructive in that. And again, it's one of those that when you look at the commodity complex, you're starting to see a lot of that type of price action. We'd like to see that persistence carry through and broaden out to a lot of the other commodities. So it's one of those early signs that maybe we're going to see a little bit higher inflation numbers in the months ahead.
So, Paul, when you've got this response, copper higher, you've got also the crude situation when you've got a dip buy. I think this two-faced market is very alive today, where half of it is rushing to the stuff like silver and gold. The other half is running to copper. I mean, copper and gold, they're on opposite ends of the spectrum here. So, again, it seems like you got to pick the red pill or the blue pill, which way, you know, you're going to bet on the economy right now, because everybody's casting their bets.
They are, and what's interesting too is the dollars come off. And you know, again, gold we look at kind of as an anti-dollar trade. So the dollars come off, you're seeing international markets do well because of that. So again, I think it's, you know, along the line of what we've been expecting out of the Fed. The Fed is going to be sitting on their hands until they see the whites of the inflation bogeyman. We're going to need to see more evidence of that before we get concerned that the Fed may have to raise rates. Right now, that's not the case. They're sitting on the sidelines, so a lot of people can feel comfortable, at least for the next few months, that you know, rates are going to stay pretty much right where they're at and trade accordingly.